Hi everyone, this is Chad with BaseFirma bringing you the first episode in our new series on global transfer pricing controversy. We've been itching to launch this series for some time now, and today we'll dive right into everything you want and need to know about advanced pricing agreements, or APAs, including some unconventional wisdom about the true value proposition of APAs in different settings and circumstances. We'll introduce innovative alternatives for companies who lack time, budget, or transactional fact patterns necessary to justify the high cost of applying for and negotiating an APA, including our very own document and defend strategy. On the hot seat with me today is the one and only Eduardo Emmerich, who you all know from our previous Meet the Team series. But Ed, in the off chance that anyone out there missed your Meet the Team episode, could you kick us off with a brief introduction into yourself?
Thanks for having me again, Chad. So, like you mentioned, I'm Eduardo Emmerich. I'm the managing partner for our BaseFirma US operations. Been here in Houston for the last 16 years practicing transfer pricing, and really excited about today's topic.
It is an exciting topic, Ed. And like I mentioned, we're starting this new series covering global transfer pricing controversy. So today is going to be kind of an overview of global controversy trends. We'll have subsequent episodes where we really deep dive into specific regional and country level issues. But today we really want to give our listeners kind of some unconventional pointers and maybe even advice on how to navigate an increasingly complex global controversy landscape. And so, Ed, when we talk about managing controversy, really the received wisdom from transfer pricing advisors, us included, right, has always been airtight transfer pricing documentation and consider advanced pricing agreements or APAs, right? And it's really that latter topic of APAs that I really want to dig in today. I think that there's some serious misperceptions, maybe some misunderstandings of what APAs are and aren't that make it difficult sometimes to make an accurate and, value proposition-based assessment on whether an APA is a good fit for a given taxpayer, a given company. So Ed, I know you don't like to brag, so I'm going to brag for you. You have been involved in some major controversy cases, major transfer pricing controversy cases, both in terms of the volume of the proposed adjustment, the size of the company. So with that background, I would love to hear from you. What is the advanced pricing agreement and transfer pricing? What are the programs available to taxpayers, and how does the process work at a high level?
Yes, I think the APA has always been labeled as the wisest route for managing transfer pricing controversies, and I think as we'll discuss later on, there is some truth to that, but there's also a lot of salt that may need to be poured on those arguments. So just to level set for our viewers, an advanced pricing agreement is simply just an agreement that a taxpayer and the taxing authorities make with regards to the intercompany transactions, the methodology to be used to evaluate the intercompany transactions, and then the results to be achieved in those intercompany transactions. Typically, a transfer pricing, advanced pricing agreement will be for a specific transaction or set of transactions over a set period of time. Advanced pricing agreements can be unilateral, so meaning it's negotiated with one taxing authorities, bilateral with two taxing authorities, or even multilateral where more than two taxing authorities will get involved. APAs typically have a 5-year term, meaning taxpayers will be covered for those 5 years, but they can be extended sometimes by either a rollback from when the original transfer pricing negotiations and process got started. And on average, based on the latest guidance from the APA and the IRS, they take about 3 to 4 years to complete.
I appreciate that background, Ed. And so diving into kind of the the business case for APAs, right? What are the most compelling reasons that a taxpayer might consider an APA rather than just kind of the traditional route of preparing your contemporaneous, let's say it's a U.S. company preparing contemporaneous U.S. 482, 6662 transfer pricing documentation?
Sure. So I think the biggest one, and the one that we hear ad nauseum and that we've also recited ad nauseum, is just the certainty that taxpayers get, right? It's important to note that APAs are legal contracts, legal agreements, right? So long as both parties hold to their end of the terms and conditions of the agreement, a taxpayer will have that certainty that it will neither be audited, nor adjustments can be made. Okay? So I think that's really important. It's the one that I think has the most, holds the most weight with taxpayers. I think another important benefit of APAs is that they do tend to be more cost effective than a typical audit. Even though, as we'll mention later, an APA can be costly and time consuming, it still is better and more cost efficient than if a company gets audited and that audit becomes contentious and lasts a long time. Along the same routes, I think APAs have the potential, but obviously not that certainty, that it may provide a potential ETR benefit to the taxpayer. This I think is especially important where a taxpayer has had audit history, right? Or there's a history of double taxation. So I would say that this plays into effect in bilateral APAs, where a taxpayer can have both taxing administrations, taxing authorities agree to a certain set of ranges or results that will be applied to the intercompany transactions that are covered. Now, I think lastly, there's a halo effect, right? And by halo effect, meaning just the carryover benefit that an APA may have on other taxing authorities that are not part of the APA. So just as a quick example, if a taxpayer has a bilateral APA between the U.S. and Canada, well, just the fact that they have that bilateral APA may prove to be beneficial if, for example, the New Zealand taxing authorities were to audit that transaction, simply because there's a strong relationship between the New Zealand taxing authorities and the ATO, and by understanding and by acknowledging that the ATO has agreed to a certain set of results, I think the New Zealand taxing authorities, or at least that's a conventional wisdom, will be more likely to accept the same set of results.
Great. And Ed, I promised our listeners challenges to the conventional wisdom today. And I think you and I have spoken enough to know that for you to know that I have maybe a few bones to pick with the received wisdom of the APA value proposition. And so I want to take these kind of three buckets that you've mentioned in turn. The first is tax certainty. So I hear you, obviously that's one of the most appealing aspects of an APA is, look, especially for, let's talk about bilateral, which represent the vast majority, or, it's about 70% of all APA applications and granted APAs. So this is where you have an APA that's being honored by two governments, right? Let's say it's the IRS and maybe the NTA in Japan. So you've got this mechanism by which you don't need to have contemporaneous transfer pricing documentation, a functional analysis, an arm's length benchmarking study every single year, right? You have this agreement where everybody, both parties to the transaction have prospectively agreed to the transfer pricing results that will be achieved, right? It saves you from uncertain tax positions with respect to transfer pricing. It saves you from issues even with your internal or with your external auditor, excuse me. There's a lot to be said for that tax certainty. But my question is, do APAs actually provide any degree of ongoing and value-added tax certainty for all taxpayers who are considering them, right? And what I'm thinking about specifically, first of all, is the discovery process. So anyone who's been through an APA before knows that the application process, the discovery process is extremely, I'll use the term intrusive. You have to basically turn over everything mildly related to transfer pricing to both of these taxing authorities who are in the negotiations for the bilateral APA process, right? This is your forecast financials, critical information about DEMPI functions, everything you would put into transfer pricing documentation, and more, right? So what your projected results would be with the applied method that you're trying to get tax certainty on, right? That in itself to me is the first alarm bell, right? And I'll mention, something that you brought up, that APAs take, on average 42 months to conclude. So you've got this 3.5, 4-year period of negotiations where things can fall through, where the application can be withdrawn. And in the meantime, you've immediately turned over all of your sensitive data to 2 or more governments, right? So on that first note, I kind of wonder your thoughts on the balance you strike between that tax certainty available to you after the conclusion and ratification of the APA versus the risk that you take in that discovery process.
Yeah, absolutely, Chad. Look, I think as transfer pricing practitioners, we love to use the phrase, well, it depends, right? And I think that's kind of been maybe the problem that we both have discussed in prior conversations about this conventional wisdom that the APA is the end all be all, right, of transfer pricing, risk mitigation, and management. The APA process is a long process. It's an arduous process. It's a very costly process. Don't think we touched on this, but just simply the application fee for a large or a taxpayer that does not qualify for the small APA is $113,000. And then you add to that, consultant fees. You add to that your own internal resources that are spending time in pursuing this APA. And what you get to is a position where I think taxpayers really need to evaluate whether an APA, right, is the right approach for them. And I would say it's a combination of multiple factors that should be evaluated in that decision. And first of which is your point of just the incredible amount of information that is provided to taxing authorities in terms of financial information, in terms of the number of interviews, right, that are typically required. So it's a very complex decision that I think it's not as easy as a lot of times us transfer pricing advisors tend to make it out to be. So there's a cost, benefit, value, and an analysis that needs to be done every time an APA is considered.
I'm glad you brought up the cost component. I want to kind of address that in this, as a separate bucket of issues. But I think, really important is your point here that, the APA is not a blanket fix for every uncertain tax position, for every transfer pricing controversy issue, right? It's an extremely, it's an extreme commitment in terms of time, resources, and is not guaranteed to pay off. So I just want to, put this all into context. We hear so much about APAs. Probably every large taxpayer listening to this right now has had a conversation about, should we just go ahead and look at an APA application for this transaction? Put this into context. A grand total of 77 APAs were executed under the U.S. Advanced Pricing and Mutual Agreement Program in 2022, the latest data that's been released by the IRS, right? So this is not, something that everybody and their brother are out doing, right? This is a serious commitment. There's not many transactions that make it through the pipeline on a yearly basis, right? Applications were up this year to, I think, 183. But still, when you look at that, 183 companies out of how many that are doing transfer pricing in the United States, let alone the world, right? I think, a lot of companies are running into these very practical issues of, does the commitment justify the, the intrusive process of data provision, kind of the risk that you provide all of this information to governments, and if it falls through, then guess what? They have everything that you've been trying to avoid having controversy over, right? It's almost an audit roadmap if it doesn't all work out.
Absolutely, Chad. And just to add to that, you mentioned the 77 APAs that were executed in 22. That's a little bit more than half of what was executed in 2021. Now, the IRS has mentioned that it's part of the decrease that we saw in 2022 is related to some administrative procedures. But I think it's important to know that this process is, if anything, it may not be getting more efficient. I think adding to that as well, I think in April 25th of this year, the IRS released a new memorandum where the TTPO team set out the acting director for the TTPO team set out some interim guidance on how APA requests need to be addressed. And to be honest, when I read it the first time, it kind of ranked, there were some red flags popping all over the place for me, because some of the guidance there indicates that for certain taxpayers and certain facts, the right approach may be to reject the APA application and to propose a joint audit with other taxing authorities or a unilateral audit. Now, they also mentioned ICAP and some other procedures, but it's something that, to me at least, indicates that there's a small but a very real risk that an APA application may be used to do exactly the opposite of what a taxpayer is trying to achieve, right? This transfer pricing certainty that we're all talking about.
Absolutely. And on a related note, kind of two other points on the tax certainty issue that we're talking about here. There's this kind of myth that once you have an APA, you have kind of endless tax certainty, right? That you're kind of set with this transaction on a go-forward basis. I just want to mention to everyone here listening and maybe considering APAs that this is far from the case, right? So for one, APAs, if you've ever actually read and executed APA, they're generally very specific about the nature of the covered transactions, the assumptions that underpin the acceptance of the APA, right? So business conditions. I have a client, for example, who had their renewal application revoked because, external sales were rising as a proportion to internal sales, and that was no longer in line with the fact pattern that was laid out when they initially applied. So, here they were thinking they were kind of on this pathway to automatic renewals for as long as they wanted the APA in place. And then it was just basically rudely terminated, right? With now the IRS having all of the information that they need to audit this transaction in future years. Which brings me to another case, which is Coca-Cola v. Commissioner from 2020, where this scenario basically played out, right? So Coca-Cola had an APA position in place for a while. It expired. They didn't renew it. They kept the transfer pricing policy. The service came back a few years down the road, audited that same transaction, made a pretty significant adjustment. And after some litigation, the ruling was that the IRS is very much entitled to do that, right? There's nothing binding them to the conclusions of a previously executed APA. The other thing I want to mention is this new environment of BEPS 2.0 that we're entering into, where we really don't know how unilateral, bilateral, maybe even multilateral tax advantage agreements like APAs are going to be viewed in this context of kind of global integrated views on transfer pricing and transfer pricing controversy, right? I know the OECD has given guidance that says, we're going to look at, APAs and existing tax agreements between one, two, or more parties in terms of how we evaluate the arm's length compensation under Pillar 1, Pillar 2. But that's just kind of a framework, and that's guidance, right? Countries will have the opportunity to apply Pillar 2 rules, like the income inclusion rule. under tax profits ruled however they want, right? And that throws a lot of uncertainty into this process that is supposed to give you the exact opposite.
Yeah, absolutely, Chad. I think just the fact that there isn't, wide consensus on a dispute resolution mechanism to address pillar one or pillar two is just an indication, right? It's just the complexity and the difficulty that taxpayers are going to face in the future years, especially right when we live in a period of political volatility and administrations that seem to be changing from, one side of the aisle to the other on a continual basis, right? And those administrations seeking to impose kind of their vision for their country and for international structures. So I think the only thing that we can expect going forward is, just a complex web of interactions and unilateral, multilateral, changes that are going to make, honestly, taxpayers' life really, really difficult.
The geopolitical point is excellent. And I think for anyone who's under any sort of doubt, transfer pricing agreements and APAs play, I wouldn't even call it second fiddle. I might say 14th or 15th fiddle compared to geopolitical, trade, other sorts of considerations that are definitely more front and center in politicians and policymakers' minds than transfer pricing, as much as I hate to admit that as a transfer pricing career guy. I want to hop back to the second bucket of perceived advantage or benefit of APAs that you mentioned, which is kind of the financial considerations. So absolutely understand, litigation is exorbitantly expensive, right? You're paying lawyers who make our hourly rates look like pocket change, right? You're going through a long and drawn out process. And, alternatively, you can have this APA in place where you have, the upfront costs. I think you mentioned $114,000 of application fee that goes to the U.S. APMA program, for example. That's just from the U.S. side. You've got service provider fees, which I'm not one to number drop here, but I will gladly disclose that those can be multiples of the application fee, right? So you've got this kind of upfront cost of, well into the six figures for the APA, end-to-end program over the 3 or 4 years that you got the application out. I look at this like any transfer pricing economics valuation nerd. I think it's got to be seen in context, cost benefit, right? And that's getting all the way down into the nitty gritty of, okay, you're basically guaranteed to have a middle high six-figure cost of the program at least, right? You've got a potential benefit of savings versus litigation under several gating assumptions, right? So the probability that the transaction that you seek the APA for gets audited, the probability that an assessment or an adjustment is made to that transaction, the probability that it actually drags out to litigation. Those are all three, pretty significant discounting factors, right, in the future potential benefit of the APA costs, right? I look at this as a net present value proposition and in very nerdy transfer pricing terms, right? You've got the upfront cost now versus a potential theoretical benefit later. I wonder how you view that, Ed, when you're talking to your clients about the financial cost benefit of the APA.
Yeah, I think if you listen to, I think the first conversation we had on our Meet the Team series, I think that one of the things that I've always tried to exemplify or portray as a transfer pricing professional is just being practical. And I think you touched on kind of the cost benefit, right? Like there's a lot of factors that I tend to discuss with my clients or internally when we're considering either proposing on an APA or a client shows interest in an APA. And obviously the cost is there, right? And we've touched on that. I think one important one for me is always, what's the audit history here? What jurisdictions are we talking about? And then really, what is the current policy or results of the transaction? speaking now just from a U.S. perspective, right? Unlike a lot of jurisdictions, especially in like LATAM, we don't have a requirement to prepare transfer pricing documentation. And I say that because a lot of times I will recommend taxpayers not to prepare transfer pricing documentations from a budget perspective if I feel pretty certain that their transactions are arm's length. And I would say the same thing applies for the APA, right? This kind of bright line test of whether or not, if a taxpayer gets audited and if they question the arm's length nature of a transaction, the IRS or another taxing authorities would be successful in that challenge. To me, that's a really important question to answer, right? And if the answer is yes, unless there are other factors to consider, the APA, I think, loses its value relative to, for example, or relative to the opportunity cost, right, of what the taxpayer and its advisors can do, right, with that additional budget, whether it's from a planning perspective or operational transfer pricing perspective, whatever it may be. I think going along the same lines, another important factor, I think, Chad, for taxpayers to consider is who's going to be the one leading the APA. I think for a lot of our clients that have, several kind of in-house transfer pricing professionals, it may make more sense from a cost benefit perspective than for a taxpayer that relies solely on advisors, simply because of just the very high fees, right, that these types of projects tend to cost taxpayers. So I think these are some of the, I'm sure there are more, but these are some of the factors that I would think about, right? If I'm putting my in-house hat on. And they're also the same factors that I discuss with them whenever they're breaching out a potential APA, or when we're proposing about a potential APA. I tend to describe my thoughts on those factors.
And I'm glad you're taking the conversation in this direction, because I don't want to be the guy who comes in and, pours cold water on all of the conventional wisdom, conventional knowledge that a lot of very smart people much smarter than me, have been doling out, right? The advice that has been given for years and years on APAs and the obvious merits that they have, right? There are cases absolutely 100% where an APA is a very beneficial and, maybe the only truly beneficial pathway towards tax certainty, towards, managing audit risk, managing controversy risk, right? I think you raise a great point on audit history, right? Totally changes the calculus if you already know this transaction is causing a stir globally in terms of potential transfer pricing controversy, if it's on the radar of tax authorities, for example. What I want to get across is that whenever an advisor, and I'll hold myself to the standard, casually mentions you should consider an APA, the red flag should go up immediately. And I think you as a taxpayer, our listeners who are in charge of transfer pricing functions should bear this in mind and really challenge your advisor on, well, what is the advantage for me from a financial perspective, from a tax certainty perspective? And if there's not a good answer that they have ready for you or that they can readily produce for you, you might not be in that fact pattern, right? And I think the dirty secret here is that probably 95% of taxpayers would fall into that category, right? Where that's not necessarily the right option to pursue for financial reasons, for practical reasons, for administrative reasons. And it begs the questions also of, okay, Chad, so you're telling me that only, small percentage of taxpayers should pursue APAs. What should the rest of us do? What's your solution, right? You can't just sit here and complain and say what you don't like, right? So
absolutely. Yeah. So that would be my question for you, Chad. What realistic alternatives do you discuss?
I was about to ask you, Ed, because I didn't want to have to answer for myself, but now that you mention it, I think, the best first line of defense, if you feel like you have a transaction or an operating model that might be risky or you're setting one up, right, is to use what I call the document and defend approach. I've seen taxpayers do this in real life. And so it's not just something that I've made up. And what this entails is setting up your, let's say if you're doing a prospective planning study, right? You're looking at a new operating model design. You're designing one from scratch. Document as if you're already in controversy, right? So this entails everything from detailed functional interview notes, from work papers, right? Having everything that you might need to turn over in the event of an audit, and everything that will help you defend the position that you ultimately choose in the event of an audit, right? A well-crafted response to an initial round of tax authority requests is your best controversy repellent, in my view, and probably your best return on investment in the entire sphere of transfer pricing. That might be an exaggeration. I'm prone to those, but I really would argue that. And, what I've also seen is taxpayers go even take the next step of writing up preventative controversy responses. So we've seen them, I think Ed, you and I have worked on an account or two where they actually get ahead of the game and start writing up, here's why we think this, hypothetical position that a tax authority might take against my, global royalty on intangibles, right, for example, is defensible under, all local and global transfer pricing rules and legislation. So again, I kind of chop it down to the nippy, the catchy document and defend slogan here. But I think that's your round one.
Absolutely, Chad. And I would add, I think a best practice, right, when an APA does not make sense is also typically from a central perspective, just having a good control and management of any responses that you've given to taxing authorities, right? From a time perspective, it saves you a lot when you're able to use responses, right, that are, that you've already given to taxing authorities, and it presents also a consistent story. I was going to add to your comment, we've actually been engaged to have mock audits, right, where a client will engage us to look at a certain transaction or a certain flow, and will ask us to try to identify potential issues that the taxing authorities may make, right? And I think the benefit from that is if the advisor's acting properly, right, and they do their due diligence, they may be able to spot issues that can be proactively addressed. And then from a cost-benefit perspective, it'll be a small fraction of what an APA will cost the taxpayer, right? But would serve as a great line of identification of potential issues. And then when there are issues, for the taxpayer to be able to respond to those, before the taxing authorities brings them up.
And Ed, let's just be honest. What could possibly be more exciting than a mock audit, right? This is the kind of stuff that gets people like me and you real fired up. But in all seriousness, I love a couple of the points that you made. One, in terms of, so if we're talking about cost benefit, look at applying that budget that you've saved on kind of casing the windmill of a, maybe a non-ideal APA towards improving your operational transfer pricing practices, which is now the kind of most sought after, kind of first round of requests from tax authorities is your cost base what you said it is, right? So move those investments to more strategic places early on. So Ed, I know everyone here would love to hear us pontificate on the merits or lack thereof of APAs, but I think in the interest of time, we'll wrap it up for today. There will be more. I promise everyone. We will have a couple exciting episodes, like I mentioned, targeting specific geographies, some input from our local country offices and experts in various jurisdictions in the Americas. So don't be too sad. We'll be right back with more in this exciting series. Ed, thanks so much for joining me today, and looking forward to continuing the conversation with you.
Thanks for having me, Chad, and excited for the future episodes.
And for anyone who would like to learn more about our experience in managing global transfer pricing controversy for our clients, including our experience with developing and deploying our document and defend strategy, please do contact us over email or on social media with links available in the show notes.